My name is Michael Guyett, publisher of the Lead Lag Report, and our special guest for the hour, Perth Tolle. This conversation is going to be primarily around emerging markets, and we'll talk on the current environment here. But Perth, for those who are not familiar with your background, just set the stage as far as who you are, how you got involved in markets, and what you're doing now.
Yeah, thanks for having me, Michael. So I grew up in both China and the United States. I was born in Beijing. I came to the US around age 9, and I went back and forth between the two countries. After college, I went and lived in Hong Kong for about a year, and that's where I first saw the difference that freedom made in my life, as well as in the markets in these various places. So when I came back from Hong Kong to the United States, I worked at Fidelity for 10 years as a financial advisor in the LA and Houston markets. And in these markets, I had a lot of clients who also did not want to invest in their home countries. For example, I had a Russian client who said, I don't want to invest in Russia because it would be like funding terrorism. So I saw that in emerging markets, in most of these funds, there was a lot of autocracy exposure, whether it be China, Russia, Saudi Arabia, Egypt, or Turkey. So I created a way basically for investors who wanted emerging markets exposure without those autocracies and also an overweight to the freer economies. So we do freedom weighted emerging markets. And instead of having about 40% in autocracies like you get in the market cap weighted products, we have no China, no Russia, no Saudi Arabia, and so forth. And in addition, the weightings are based on freedom levels in these countries. So the higher freedom countries actually get a higher weight. So that's what we do now, which is freedom weighted emerging markets.
Okay, so there's several things I want you to define because I think it's important to just make sure everyone has a level playing field. So first of all, define autocracy. When you say countries that have autocratic rule, just explain what that means for the audience.
Yeah, so we're looking at countries like China, Russia, and Saudi Arabia are the biggest three that I think of in the emerging markets universe that I would call autocracies. And basically, these are just countries where one person makes a lot of the decisions and there's not a lot of feedback loops on the ground for other opinions or any kind of democratic process. There may be elections, but the elections are typically kind of they're sham elections or they're not really legitimate elections. They're, like we had in Russia. So, and now sadly in Hong Kong. So that's how I define kind of autocracy. Now keep in mind that I'm using third-party quantitative data. So I'm not the one making these definitions. We do exclude these countries that I'm calling autocracies, but it's mostly based on freedom data. So it's the level of freedom, not the level of autocracy, that determines the weights in our products.
Right, because obviously you can have a beneficial or benevolent government that's an autocracy, although you could argue that is hard to have from a incentive perspective, right? Because if you're running the country and you pretty much want that power and control, and power is very good at corrupting people. But okay, so let's keep going on definition. So autocracy, okay, now freedom is a term that's used a hell of a lot. And I don't believe that there's ever a truly free nation, right? There's degrees of freedom. Talk about how you define freedom and then how that's quantitatively done by some of these third parties that you mentioned.
Yeah, I think you just brought up two really good points. I'm going to hit back on the autocracy thing for just 1 second there. You're right. There could be benevolent autocracies and benevolent monarchies and so forth. And we saw that in Hong Kong in the recent past until like a few years ago. So now that benevolence has left the autocracy part of the equation. So now we're seeing a less benevolent autocracy there that is more like China than before. So you're right. It's not about the type of government. It's about like freedom is the end goal. It's not that, non-autocracy is the end goal. But yeah, the incentive structures there do not help maintain freedom, I guess. And then going back to how to define freedom, and you're absolutely right there as well, and make a really good point that there is no 100% free market, just like there's no 100% oppressive market. It's all degrees of freedom or oppression. And even in the United States, we don't have 100% freedom. I mean, far from it. And we just happen to be like the least worst, right, of, some of these countries. So we define freedom as, I put it in three buckets, basically civil freedoms, political freedoms, and economic freedoms. And our data providers split that into two buckets. So they put civil and political freedoms together and call it personal freedom and then economic freedom. And they use 79 different variables that encompass both personal and economic freedoms. So these are things like terrorism, trafficking, torture, women's freedoms, rule of law, due process, civil procedure, criminal procedure, freedom of speech, freedom of media, freedom of religion, freedom of assembly, freedom of the press, and so forth. And then your economic freedoms like rule of law, business practices and regulations, taxation, freedom to trade internationally, soundness in monetary policy. So these are the things that go into the score that we use for each country, which then derive our country weights.
I'm going to assume that rule of law is, of those 79, probably from an investment return perspective, in the top 10 in terms of most important things for countries, right? Because you've got, countries and markets in the Middle East, I'm sure, that certainly don't have the civil freedoms and liberties that you would hope they would, but they might have stronger rule of law than maybe a country like China. Talk through that a little bit, because I think rule of law is often underappreciated as the reason for why somebody can be comfortable putting money to work overseas.
Yep, that's another really good point. So rule of law is actually one of the biggest factors in this process. There's 9 subvariables that they use for rule of law, which is, then makes it like 9 out of the 79, which is kind of large. It does overlap between personal and economic freedom. So the reason why rule of law is important in investing is that you want to have the certainty of knowing that your contracts are going to be honored, that if something, happens, like you have shareholder rights, things like that. So without rule of law, without private property rights or intellectual property rights, there's no way to kind of protect the fruit of your labor, so to speak. So, there's less incentive to then innovate and, grow, because there's no protection on or incentive to do so. So rule of law is absolutely one of the most important ones. Our data providers like to say that all freedoms are important, that they work together like the parts of an automobile. So you can't have a steering wheel without a transmission and the car still won't run. But you could argue that rule of law is one of the more important parts of that automobile. So I agree with that completely.
Yeah, and I remember when I was reading the Age of Turbulence by Greenspan, there was quite a bit of discussion Greenspan had around that very point, that's why U.S. capital markets are as large as they are. It has less to do with democracy and less to do with economic activity and more to do with confidence, right? That the rule of law will be there so that there are protections, and rights are defended from outside capital that goes into the U.S. So I think that's kind of an interesting point to make.
The U.S. is about number 18 out of 162 countries that our data providers score. You can use other data providers as well. There's, Freedom House, there's Heritage, there's all kinds of data on this type of thing. And you can also look at corruption or, nation state, like other factors like, legitimacy of certain political processes and things like that. So yeah, the U.S. actually doesn't score at the top, even in developed markets. And in fact, their score has been declining. Our score has been declining for several years. Now, that being said, we are still, like I said, the best of the worst, so to speak. And, it's all relative. And I think that with the current events going on, a lot of these countries that have shown recent declines, but that have high absolute levels of freedom, are actually going to see possibly some increasing freedom levels going forward, relatively speaking, just because the freedom levels in the less free countries are declining a little faster right now. So yeah, I mean, like Norway, Australia, Singapore have historically been higher, but we've seen obviously a lot of issues in some of these countries that I just mentioned. So, so relatively speaking, we'll see. And Canada usually is on par, but slightly higher. So we've seen a lot of issues in Canada and Australia as far as personal freedoms go during COVID. Nothing close to what we see in the emerging markets, of course. That's why we did this in the emerging markets first, because in the emerging markets, you see a huge discrepancy between freedom levels that is much larger than what you see in the developed markets. And so we found that, the alpha is to be found in the emerging market space in a freedom weighted type of strategy versus developed market. Now, we do have a lot of people requesting that we do developed markets as well. I think that's because it's a more popular investment option. And, everybody has developed market allocations, whereas not everybody has emerging market. So I think we do get a lot of requests for that reason. But I do still believe that for this strategy, the higher alpha is to be found in emerging markets. If you want like a running scorecard for freedom in a certain space. And we have seen a very stark outperformance in the emerging market space if you compare us with, say, EEM or IEMG or VWO. So I think we have seen that kind of play out, the thesis in emerging markets, but in developed markets, it would be interesting. I haven't done the back test to see, if there would be outperformance there as well. But I would suspect that it would be there, but to a lesser degree, because the freedom levels in developed markets are a little more homogenous, but there are differences. So yeah, there probably would be a smaller like outperformance over time, but there still would be, I believe, an outperformance.
So I'm curious if there's, and I'm going to assume the answer is yes, if there's a link between economic freedom and a nation's wealth gap, right? In terms of the differential between very wealthy and everyone else. And I say that only because, my assumption would be that the more economic freedom there is, the more it's a level playing field in terms of conditions and everyone having kind of a fair shot. Whereas in more autocratic, less economic free countries, you're going to have much more concentration of wealth. Talk through that a little bit, because I think that's an interesting way of thinking about this.
Yeah, so that is a really good point. Thank you for bringing that up. So we look at the equality of opportunity and not the equality of outcomes. So the equality of outcomes is not what we want to focus on. It's the equality of opportunity. Everybody should have equal opportunity to innovate, to succeed. And, everybody has different things to contribute to the world. And so, each individual should have equal rights or opportunity. And so that's what we look for in the scoring. And as far as the outcomes, there are a lot of beneficial outcomes to freedom, including there is actually a little less inequality in certain aspects, like gender inequality. There's less gender inequality in freer countries. There's higher life expectancy, lower infant mortality, higher GDP growth, higher income per capita, lower poverty rates. So you actually see there can be a lot of differences in outcomes as far as poverty or wealth, but you see the lowest quartile of income. So the poorest people in the freer countries are much richer than the poorest people in the unfree countries. So there is inequality in the end, yes, but I would argue that there's a lot less, inequality in that even the poorest people in the richest countries are faring much better than some of the less poor people in unfree ones.
So you had mentioned the word corruption, and I'm trying to think through, how do you quantitatively determine if a country is more corrupt than another? Talk about how some of these variables are measured in terms of how you can actually create a score. And I understand this is third party, but in your own due diligence and thinking about how to come up with an index, an approach around this, how do you quantify some of this stuff?
Yeah, so I actually, before I started using our data set that we use from these third parties, which we use Cato and Fraser. So, and these guys are, world leaders in freedom econometrics. But before I started using this data set, I actually created my own, what's called a human rights quotient. And it was a way of quantifying qualified human freedom metrics. Because at that time, I thought about this a long time ago, way before I actually started the company. And so at that time, there was no kind of quantitative measure of human freedom. There was economic freedom, but I define human freedom as the combination of personal and economic freedom. So, you need to have both, right? You can't be half free. So, I believe these freedoms are interconnected. And so I created this way of quantifying human freedoms, including economic freedoms. And it was basically using an ordinal scale system. So let's say that, there's a report for journalist killings in, any given year in a country, right? If there's between 1 and 5 journalist killings, we give it a score of 5. Between 5 and 10, we give it a score of 4. Between 10 and 15, we give it a score of 3, and so on and so forth. And that's really how we did it. So when I actually left Fidelity, I was home with my child, and when she got big enough to go to school, that's when I went full time on this. And that's the time that when I went to score the countries using my system, I went to the economic freedom kind of data set website, and I saw that they had now a thing called the Human Freedom Index and data set. And I was like, what is this? So I called my contact there, and I was like, Fred, what is this? And we compared notes. And at the time, I had a provisional patent on my system of quantifying human freedoms. And I shared that with Fred, and Fred shared with me their system, and it was almost identical. Because of that, and because I wanted full third-party objectivity, where none of my subjective opinions mattered at all, I asked Fred if I could use their system, and he said yes. And so I'm thrilled about that, and I, love that I have zero subjective opinion or input into the scoring system, and we work completely independently, and likewise they have zero input into or influence into our scoring or our turning the scores into country weights. So because of that, I actually, all I know is, the data sources they use, they don't actually currently measure corruption, because corruption is almost perfectly negatively correlated with freedom. So the higher the freedom, the lower the corruption level. But if you're curious about that, there is a data source called the Transparency International, and that's all they measure is corruption. So they have that data out there. I don't know their process or their methodology, but I believe it's pretty clear if you look into it.
Let's talk about back testing for a few minutes here, because I'm a huge fan of back testing, even though a lot of people will argue that back testing really doesn't work, although those people that say that seem to also believe in buy and hold, which I always make a point is a back test with one trade, right? Everything in markets is a back test. Now, the dilemma with back testing as a methodology is that you have to be always careful about the causation changing, right, of whatever it is that you're testing. So in my world, for example, I often talk about lumber and gold, utilities, right? And the causation in particular for lumber as a leading indicator, even though it hasn't really worked so far this year, obviously, is that when lumber is weak, it tends to precede housing weakness. That tends to precede economic recessions, contractions, risk-off periods. And that's because the average home has about 16,000 board feet of lumber. That causation is unlikely to change anytime soon. Now, because different countries obviously will have different turnovers of political leaders, I'm going to assume there's a bit of a challenge in terms of thinking about how to backtest an approach that's based on freedom metrics, which might alter based on who's in power. And I've heard you talk about the example of Poland. I want you to talk about that for a little bit, because I think that, I'm going to assume, makes it much more dynamic in terms of how to think about weighting towards a particular country than not.
Yeah, Poland is a really interesting case. And right now, Chile is a case that I think is similar to what we saw in Poland in the past several years, where there is kind of a change in the government and people are concerned. So Poland, back in 2016 or so, they elected a far right-wing government, the PIS government. And when we were at these freedom meetings, I do go to some of these freedom meetings with the econometricians that have, they use like 100 think tanks around the world, and some of these think tanks, they all get together annually. And where those meetings are in the United States, I try to go. And that year, I was there with the Poland delegate, and the Poland delegate told me, "Hey, we're electing this sort of crazy government. They're going to get constitutional majority, and you're going to see some declines in freedoms like women's freedoms and judicial independence and so forth. But that won't be affected, or it won't be shown. It won't show up in the markets for a couple years." So it's going to take time for those policies to affect markets. And it happened just as he said. In 2017, Poland was still the best performing emerging market and number one in our index. Our index was incepted in 2017 in its current form, and our fund incepted in 2019. And then in 2018, Poland dropped to number 4 based on their freedom score. So by then, you had seen some erosion of judicial independence, of women's freedoms, and so forth. And it was affected, it was reflected in the scores. And so then it was reflected in our weights. And they haven't gone up from number 4 since. So with a country like Poland, where there are some, relatively speaking, again, strong institutions, there is some rule of law, pretty good, relatively speaking, and there are good individual protections, and there's a good electoral process. There can be blips like this. And just like in the United States, we can have blips like this where maybe a more extreme or less beneficial government gets into power, but there are processes and checks and balances to keep that from, going too far out of control, hopefully. Right now, we're seeing the same thing in Chile. A government has gotten into power that may be bad for certain economic freedoms. And there's a lot of concern in our, freedom circles about that. But you can see they're still the top performing market this year, mostly because of their commodities exposure. So there's so much noise in backtesting, not only electoral processes and who's in power, but also other things like Russia invading Ukraine, and now commodities prices are soaring. And so you see Chile being actually the top holding in our fund right now because of market movement, not because of their freedom score. So yeah, I think that, with backtesting, you have to be very careful because there's just so much noise, and it's very difficult to pinpoint what is correlation versus causation. The thing that probably most inspired me to do this, because I'm a product of the one-child policy, and I saw how it affected my generation in China, and it changed the culture of the generation, and that's not something that I see reversing anytime soon. I had a friend in Shanghai when I was in Hong Kong that, we called Maggie, that she had no birth certificate, no school records, doesn't exist on paper because she was born the second child and her parents registered her brother for school and for existence. And she was just like me in any other way. And I realized that could have been me. So this is one of the issues that I'm most concerned about. And, as we see, China now has the world's worst demographics in the world. I do want to highlight, just the last couple of days with this zero COVID policy, we've seen some of these police dressed up in these white suits going from house to house and dragging people into quarantine centers. So the new rule in some parts is that if anyone in your compound or your building, everybody in China lives in these kind of like apartment compounds, right? So if anyone in your compound or your apartment complex gets tested positive, like one person, the entire compound has to go quarantine to a government quarantine center. I saw this video circulating last night of these police in these white suits at this door, and there's the couple inside, the husband and wife, and the police is saying, you have to come with us or this will affect 3 generations of your family and it'll be in your record. And the man says, oh, well, we're the last generation, so thank you, and closes the door. So this was like a very hilarious kind of a video because of the way that he said it, but also you see this kind of very it's a way of protest that people in China are doing, similar to what they did last year with a lie down protest. If you guys are familiar with that, they just decided, well, we're not going to work like hamsters anymore. We're just going to lie flat and do nothing. And that was like a big thing with the youth in China, the lie flat movement. And now we see this unusual type of protest where we're not going to have children because we don't want our children to now be oppressed by this government and get dragged to, quarantine or whatever other forms of oppression are going to be out there. So that really hit a nerve with the Chinese people as kind of a sort of protest. And then the hashtag for like last generation got censored on, WeChat and all these other Chinese platforms, social platforms. So that's kind of a quick anecdote from last night of, what's going on with the birth rate. China also last year, as you guys all know, probably turned all the online education companies, which were very profitable, into nonprofits overnight. And these companies like TAL and EDU, I encourage all our listeners to look up what happened with TAL and EDU. Just look up the 1-year return and you can see exactly the day that the government came out and said this. It was a Friday night, stroke of a pen. They said all the online education companies are now nonprofits. So these very profitable companies lost all of their shareholder value overnight. And the reason why they did that is to decrease the cost of childbirth. Why are people not having children? Because the one-child policy changed the culture of my whole generation. And so now the following generation is similar and nobody wants to have more than one child. And when they went to 2-child, it didn't help. And then went to 3-child. Is the CCP weaker than they claim to be? They've always been weaker than they claim to be. And that's why they have to show these strengths in this way. And it's very obvious, I think, to the outside observer and to the people on the ground in China, though they can't say it. So yes, I do believe that the CCP is, by going from 1-child to 2-child to 3-child policy, is saying, look, we had no business controlling how many children people can have. Like, it didn't work. And we're just going to go from 1 to 2 to 3 because really, we deep down somewhere know that it is the right thing to do to just let people have as many children as they want, but we can't admit it, so we're going to go to 3. So that's, yeah, I agree with you there on that. As far as the prospect of birth rates going up, I mean, judging from the anecdote from last night and just from statistics, that looks very bleak at the moment. And also they have very poor immigration policies. They have poor freedom of movement inside or outside, into or out of the country. So I think that does not look good. So demographics in China are the worst in the world, and I believe they will stay that way for a while. I will actually address the abortion issue that has come up with several CIOs last week have emailed me and said, hey, do you guys measure this? We actually don't. So we have no measure for that currently. Our women's freedom metrics are women's freedom of movement, women's rights to children after divorce, women's rights to inheritance, FGM, and there's one other one that I'm leaving off. But yeah, there's no metric for that. But for people who are interested in, what I just talked about, the one child policy and how that particular policy led to a lot of forced abortions, infanticides, and things that led to now 30 million missing women in China. The movie that I would recommend is called One Child Nation. And this, I thought I knew a lot about this until I saw this movie and it blew my mind. So One Child Nation, I believe it's free on Amazon Prime, or maybe it's not free, but it's on Amazon Prime. I would highly recommend for that. So we have about 19% in Taiwan, and the benchmarks have about 16%. We have a cap on securities. So the biggest security in Taiwan is Taiwan Semiconductor. We have about 7%, and it's the same in EEM and VWO. So they have about 7%. So it's very similar as far as the Taiwan exposure. The difference there is we believe that invasion risk, or any autocracy risk, lies with the autocracy. So the bigger risk, if China were to invade Taiwan, is China and not Taiwan. So I would be more concerned about having 30% in China in these market cap weighted products than having 16% or 19% in Taiwan. As we saw with the Russian invasion of Ukraine, Russia is the market that got decimated. Now, Ukraine obviously too small to see what would happen there, but the autocracy is where the risk lies. So that's the position that we take with that. And the way we manage that risk is we have zero allocation to China.
I'm curious if there's a relationship between some of these countries that are quote unquote freer and the sector makeup of their local stock markets, right? So my initial thinking here would be that the less free, the more those markets might be dominated by state-owned enterprises, which tend to be more natural resource and maybe the banking system. Talk about if you've had any sort of done any work on the connection between sector weightings and how free a country is.
Yeah, thank you for bringing that up. So actually, I think somebody mentioned in the comments to your post about this particular spaces that commodities are part of the problem here. What we see is in freer countries, the countries with natural resources are less dependent on that particular natural resource as the only source of revenue. So in the unfree markets, you see especially Saudi Arabia and Russia, there's a lot of dependence on one natural resource, and that's like all they have. Whereas in the freer markets like Taiwan that have like no natural resources, they still have very well-performing stock markets, very well-performing economies, even without natural resources. And so it's natural resources, and commodities are not the only, I guess, source of growth or innovation or progress in freer markets because they have the freedom to innovate in other ways. Whereas in some of these countries that make the natural resource like their only revenue driver, and it becomes like this way of doling out, distributing wealth versus creating wealth, I guess, in these countries. So we do see a lot of less natural resource dependence, or less commodities dependence, I should say, in these freer emerging markets. Now, we do have some emerging markets that are pretty free, like Chile, that have a lot of commodities that make up a huge part of their economy. So that doesn't change. But the difference there is that they have the freedom to put their company's interests first and to pivot if they need to. So they don't have to answer to the state first. They can answer to their own shareholders and make pivots as needed, even though they have exposure maybe to some of these less free markets. So for example, in Chile, one of our biggest holdings is SQM. And this is a mining company that previously mined mostly copper. And then when China had their there was a time when China was providing a lot of subsidies for self-driving electronic vehicles. And there was a huge need for the batteries for lithium. And so SQM pivoted from mostly copper to mostly lithium to kind of meet that demand in China. And that's a very, we don't have any exposure directly to China, but we do have that indirect trade exposure. And we actually believe that's good. So the more free trade, the better in a country, basically. So we just don't want that direct autocracy exposure where the government can say overnight, oh, you're a nonprofit now or something like that. These are companies that can put their own interests first and not the state. As far as state-owned enterprises, that's a really interesting thing right now because we're seeing the crash in mostly the China market, and these are not state-owned companies that have crashed, and these are our very familiar holdings like Tencent, Alibaba, and so forth. And we're seeing from that there is really no independent company in some of these unfree markets, especially China. So in China, there's no non-state-owned entity really, even if it's not technically an SOE. We do actually exclude SOEs from our security holdings just to bring the economic freedom theme all the way through. But we think that is secondary to first having the freedom in place. So without the individual freedoms, rule of law, stronger institutions, there really is no independence. There's no private company in some of these countries. So in fact, I'm sure most of our listeners are aware that every company in China is required to have a CCP cell within their company. So somebody from the CCP has to be part of their company management. So that is not the level of independence that we want. Even excluding state-owned enterprises, I don't believe would capture some of that risk.
So I think it's interesting because the problem that I think we face as people who are creating strategies is that all that sounds good on freedom and most people would intellectually agree with it. But at the end of the day, nothing matters more than a chart, right? Nothing matters more than performance. I always go back to this point that, right, momentum chasing and FOMO is far more powerful than anybody's ideals and morals. How does everything you just said about sort of the less freedom, the more commodity sensitive, how does that play into the current environment in terms of fund flows? Because there's obviously been some real strength in the commodity space, a lot of concerns about scarcity and that being a form of cost push inflation for a while. It seems to me that investors are so nervous about higher raw material prices that they're almost forced to go into countries that are not free.
Yeah, no, I would disagree with, I can see that being a temptation to like invest in the unfree markets because they have oil or whatever. But there are more innovations in countries that are oil producing that are more free as well. So there's not a monopoly on that. And you see countries like Chile that have a lot of other commodities that are benefiting from this kind of commodities rally as well. What we try to do is be kind of a running scorecard for freedom, because as I mentioned, there are a lot of benefits to freedom, and like you said, they're very nebulous. Things like less gender inequality, higher life expectancy, and so forth. These things are very nebulous and hard to visualize. So we try to be a running scorecard for the freer countries in the emerging market space. And if you look at our returns, if you chart FRDM versus EEM, so for example, whether you're looking at 1 year, or since inception, the outperformance is quite stark. So I don't believe that will, be the case all the time. So this is definitely not guaranteed of a future continued outperformance, especially to this degree. We've had some very, very extreme events like COVID and this war. So I think that is not going to continue to this degree. But, our thesis was always that freer markets, that they would grow more sustainably, that they recover faster from drawdowns, and that they use their capital more efficiently, whether it's human capital or whether it's, economic capital. So there's less capital flight and capital destruction. We saw this play out in COVID, especially the second point with, higher or faster recovery. So the second half of 2020 is when you start to see the freer markets really shine, because they outperformed, broad emerging markets. They outperformed emerging markets ESG. They outperformed emerging markets ex-China. So it's not even just China. So that is, some of the benefits of having that flexibility to pivot, when your companies are free to act in their own and their shareholders' best interest. I'm just going to tell you a quick story. So when I was in Hong Kong, this was around the time when SMIC, SMIC, the Shanghai Manufacturing or Semiconductor Manufacturing International in Shanghai, was starting out. So they were just starting to be founded and they were a startup at the time. And this was 2003. So we actually knew the founder from Texas. I'm from Texas here in the US. And he worked at Texas Instruments with some members of my family. And so they tried to recruit me to go work for SMIC. And so I went to visit and I met with two departments, sales and basically government relations. So this is where I learned that every company has a government relations department. And this is different from having that CCP cell in the company, which is a newer thing. But at that time, even every company that operates in China has a government relations department. And the person who works there is very similar to the type of person that you would have working in sales or PR. So this is something that I learned while I was there. Now, they were trying to recruit me to work there. The founder his name was Richard Jiang, but the kids who I met with, and I call them kids because we were all like 20, 23 at the time, they told me, look, don't come here because of the IPO. Because at the time it was right before their first IPO, and all of my banker friends in Hong Kong were telling me, oh, this is going to pop. It's going to be, tripled upon IPO. And so everybody wanted to, it's kind of a hot thing to be recruited by this company at that time. And so the people that I met with, the young, like 23-year-olds who worked in this company at the time, and they were all expats from the United States. And they told me, hey, don't come here because of the IPO. Come here because you feel called to be here. So these were kids who literally were there with a bigger purpose in mind of making China a better place. And then fast forward to now, this company, Richard has been basically run out of the company. He's no longer there. It is owned by basically the state. All the officers and executives in the company are appointed by the state. They are, they did not pop on their IPO. They were sued by Taiwan Semiconductor and lost the lawsuit for IP theft. They had a second IPO on the Star Board and did better there. But they are still 5 or more years behind in their semiconductor technologies than a company like TSMC or Samsung. So you can see what happens when, I guess, a company has to answer to the state before all other shareholders or stakeholders, is that it does not encourage innovation. It pushes out people who are there for the right reasons. And, it becomes like this arm of the state, and just the efficiency level decreases. So that's kind of how it works, like a real life example. As far as how the person who's in each company that represents the CCP, what they do, that's unclear to me as well. I don't see a big purpose for that individual. I think, perhaps, and this is just my conjecture at this point, but perhaps it's there for kind of purposes of making sure everyone stays in line. So, but yeah, I don't know. I don't see a big purpose for that individual, and I don't know exactly how it works right now in the companies on the ground in China.
Let's talk about reforms for a second. Again, there's always you'd hope, a pendulum swing from one extreme going the other, and presumably there are certain policies in certain countries that are becoming more free in the way that their economies operate, in the way that countries deal with their citizens. And I know this is kind of a odd question to ask, but is there some sort of sense of how long it takes for a country to become more free And what do you do during that transition, right? Because if you go the argument that markets are a discounting mechanism, that stocks will respond to better economic reforms coming, you still need to see the reforms actually take place, but the stock markets of those countries may have already moved in advance of anybody really noticing.
Yeah, I'm glad you brought this up. Thank you for that question. So basically, what we've seen is that when freedom levels increase, that it happens very gradually. And if they increase due to revolution or some type of crisis, that the crisis does have a negative impact first before it has a positive impact. So increases happen gradually and sometimes are preceded by a crisis, and decreases happen very quickly. We actually have a methodology rule called the freedom decline momentum rule to catch those very fast declines in freedom before it gets too bad. So the only country that's ever triggered that rule was Turkey in 2018 based on their 2017 freedom decline, and they've never made it back into the index since. So that's what we do to catch, kind of as a stop loss mechanism to catch those very fast freedom declines. And like you said, some of these improvements in freedom, maybe markets already capture them ahead of time. And what we found is that the markets try to capture them ahead of time, but oftentimes fail. So it's, as you know, it's difficult to predict the future, as we know in markets. So yes, and elections are a perfect example of this. Elections are notoriously very poorly captured by the markets, very poorly priced. So we often price it wrong. And that's what we've seen in countries where we expect a lot of freedom momentum to the positive side. So one example of that is Argentina. If we included freedom positive momentum, which we don't, like expected freedom momentum, we would have included Argentina a few years ago because there was huge expectation of positive momentum, but it didn't happen. So yeah, we actually don't include any kind of expected freedom movement except for just the freedom decline momentum rule, which catches the previous year decline. So yeah, we don't try to predict the future, and we just use the actual level of freedom at the time of measurement for our metrics. But yeah, that's a good point. And if we could predict the future, I would absolutely use expected freedom momentum. But we've taken the position that we cannot predict that.
Yeah, no, that's fair. And it's more just a question of sort of timing, right? Because I would assume that if a country's transitioning from less free to more free, that those equities would immediately respond in a faster way. And I would make this point: the biggest returns always come at the turn, right? It's tends to rarely be sort of in the middle of the trend. It's more when you have to take the leap of faith and catch the falling knife, right? Just from a compounding perspective. Okay, now I'm curious, Perth, just from everything you've seen in the last, let's call it, decade or so, which emerging economies have improved the most in terms of freedom metrics, which have worsened the most, right? Talk about the extremes for a moment.
Okay, so I mean, there's a lot of, I guess, markets that have improved. So one is Taiwan. From about 1990, their freedom levels have shown stunning growth, and likewise their stock market. So if you look at the last a couple of decades, their stock market has grown or four times the rate of some of their neighboring markets, and their freedom levels have also grown, and they've now become like the shining beacon of freedom in their region. And that's what we see a lot of. Chile historically has been similar in the Latin American, South America region. Of course, now we're expecting to see a pullback on that. So it comes in waves sometimes, and now we're seeing the other side of that wave. So yeah, I would say Taiwan is the one that comes to mind the most when you say countries that have improved. Turkey is one that comes to mind as one that has declined the most, and we saw that accelerate over the past years as well. So yeah, I mean, those are, I guess, the two I would think of. But if you look at some of the borderline countries, I think are interesting as well. So the freedom increases and decreases are sometimes less subtle than what I just mentioned there in Turkey and Taiwan. But for example, in India, India is the world's largest and oldest democracy, and I was very surprised to see it drop out of the index in 2021. It was in there in 19 and 20, and it dropped out in 2021. It was because they had some repression of their Kashmir peoples, which continued. They coerced the media more than previous years in that year. And then they blacked out the internet in places that had protests. They had a lot of farmers' protests that year. India always had a lot of protectionist policies as well, which caused them to have a little smaller allocation in our index because of the trade policy, the tariffs and the non-tariff trade barriers. But that year, their personal freedom score caused them to actually leave the index. And so I think that's an interesting one to watch because they are very borderline and they could make it back in at any point. They did not make it back in 2022, but they could make it back in at any point. And I think, some other borderline countries like Colombia is interesting to watch as well. Colombia is benefiting from the migration from Venezuela, just like Poland is benefiting from the migration from Ukraine right now. And this human capital in the long run can be a huge boon to these economies. So I think those are some interesting ones to watch.
Yeah, very interesting. I think that may be a good place to end the space. Please make sure you follow Perth, everybody. It's good to get sort of an array of different subjects. And even though emerging markets have been atrocious, I think Perth's explanation has been exquisite. So thank you, everybody, for joining, and enjoy the rest of your day. Thank you, everybody. Thank you, Perth.
Thank you. Bye-bye.
All right. Cheers.